Good morning and welcome to another year of doing business with us here on Channels Television. This is Business Morning. Thank you for joining us. I'm Chimeze Obi Iwago.
And I'm Ladi Williams.
Well, we kick off on the global oil market as prices rose and expectations that OPEC and allied producers may cap output at current levels in February at a meeting later in the day today as the coronavirus pandemic keeps worries about first half demand elevated. Brent crude for March was at $52.42 a barrel, up 62 cents, while U.S. West Texas Intermediate crude for February rose 55 cents to $49.07 a barrel. OPEC Secretary General Mohammed Bakindo said on Sunday that while crude demand is expected to rise by 5.9 million barrels per day to 95.9 million barrels per day this year, the group sees plenty of downside demand risks. In the first half of 2021, prices ended 2020 about 20% below 2019's average, still recovering from the impact of the global economic lockdown measures imposed to battle COVID-19 that slashed fuel demand, even though the world's major producers agreed record output cuts through the year. OPEC and allied producers, including Russia, a grouping known as OPEC Plus, decided at a meeting last month to raise output by 500,000 barrels per day in January, anticipating a boost in demand, and agreed to meet every month to review production.
And it's official, the Africa Continental Free Trade Agreement has finally taken off on January the 1st. And this comes after months of delays caused by the global coronavirus pandemic. Yes, the AFCFTA has taken off, but experts believe the January 1st launch was largely symbolic, with full implementation of the deal expected to take years. The deal aims to bring together 1.3 billion people in a $3.4 trillion economic bloc that will be the largest free trade area since the establishment of the World Trade Organization. The World Bank estimates it could lift tens of millions out of poverty by 2035.
And talking about lifting millions out of poverty, did you listen to the president's New Year message? Again, he has re-emphasized his administration's commitment to the youth of this country by promising to fulfill their demands. Let's take a listen.
In securing this nation, we need to secure the future of our youth. Our young people are our most valuable natural resource, at home and abroad.
And right on point, no nation grows without its youths. According to the World Bank, investing in human capital is key to economic growth of any nation. However, one thing is to recognize and understand this. Another is the willpower to ensure that the dreams of ensuring growth and development comes to reality.
As an administration, we are currently undertaking a series of social interventions designed to boost job creation and support the entrepreneurial drive of our youth. With the recent opening of our borders, we expect that the pent-up demand of legitimate cross-border and international trade will boost the fortunes of the many small businesses and agricultural enterprises that depend on Nigeria trade and commerce. The message to our West African neighbors is that Nigeria is once again fully open for those willing to conduct business in a fair and equitable way.
President Muhammadu Buhari, Nigeria's president. While the Director General, Lagos Chamber of Commerce and Industry, will be joining us to talk about these and more in a moment. All right, we're being joined by the Director General, Lagos Chamber of Commerce and Industry, Mr. Muda Yusuf. Good morning, Mr. Yusuf.
Good morning.
Very good to see you. Happy New Year to you.
Happy New Year to you as well. Good morning. Morning.
Well, year 2020 has come and gone. Yeah. What would you say were the key lessons for that year?
Yeah, thank you very much. The key lessons were the lessons that were drawn from the key developments during the year. Of course, as you know, we had the COVID experience. there was a lot to learn from the COVID experience, both by government and by businesses. We had the challenge of economic recession, which was connected in a way to the pandemic experience. We also had the experience drawn from the NSAS. Now, starting from the COVID experience and the economic recession, I think one of the key lessons is the lesson of self-reliance and the need for us to diversify the economy. Because at the peak of that pandemic, practically all countries shut their doors. There was no export, there was no import. So nationalism became the in thing. Everybody was putting the country's interests first. So we had a situation where raw materials could not come in, where food imports could not come in. There are some critical products that we need for the economy could not come in. It dawned on us that at that time, if you hadn't had some minimum capacity in the area of self-reliance, it could have been a total collapse of the system. So one critical takeaway or lesson from that was that it is important, particularly in some critical areas like food and drugs and some very basic needs. A country must have some elements of self-reliance, ability to be economically independent. And of course, there was also the lesson of economic diversification. We have been saying this every now and again, we are too dependent on oil. Mm-hmm. And we saw what the COVID did to oil price. Mm-hmm. It was a total crash of oil price. Yeah. We saw what it did to revenue, what it did to our foreign exchange reserves. Mm-hmm. So that further underscored the lesson of diversifying the economy. True. Of course, we have been saying this for so many years. We haven't actually moved in concrete terms in terms of achieving that diversification. So that was another major lesson. Then, of course, there was also the lesson of the need to apply technology. We realized that it was critical to use technology, and that is a lesson that we are taking away with. From the COVID. Practically all organizations, businesses, and all of that now recognize more the value of digitization, the value of the use of technology at meetings, in transactions, and all of that. And these are very, very important lessons that we have learned. And it has also helped to actually bring down the cost of operation of many businesses. So even post-COVID, these are lessons that should stick with many organizations because we have since realized the benefits and the kind of cost effectiveness that the use of technology has brought about. Yeah. So, of course, there was also the lesson of innovation and creativity, business flexibility, and the imperative of import substitution. Because the whole experience of 2020 taught us that it is important that we focus on import substitution. We saw what happened to the exchange rate. We saw what happened to the capacity to import. We saw what happened to the foreign exchange market. We saw what happened to the access to foreign exchange. So as much as possible, areas in which we can promote import substitution, I think we should. These are some of the hard lessons. Of course, lessons of innovation, creativity, because we faced an unusual challenge, both as an economy and as businesses. And it brought out, quite a lot of innovation and creativity among investors and even also with the government. So these are some of the lessons I think we are coming away with from the 2020 experience.
2020.
Yeah.
So listening to the President's New Year address, he sounded very committed about economic growth sustainability. So what policies or programs of government would you like to see sustained, and which ones would you like to see changed at this point?
Well, the government has committed to quite a number of reforms, which it would be nice to encourage the government to continue. The first of this was the deregulation of the downstream sector. Okay. Although it's a fairly difficult, reform to push because of the social environment, because of the dimension of the political economy. But somehow, at least the government has managed to push it up to a point. And it is important because we need that kind of reform to promote investments in the downstream sector. You know, we have been in oil business for close to 50 years now. And you can see what is happening to the downstream sector. It's almost in tatters. The refineries are not working. The pipelines are practically broken down. Nothing is happening in terms of concrete economic investment in the downstream sector. So that reform, if it is sustained with the collaboration and support of the critical stakeholders, I'm sure it will help a great deal. Then we had some steps that were taken around the cost-reflective tariff.
Okay.
The power sector is a major sector. It's a very strategic sector. And over years, we have had very serious issues with that sector. And the fact that the power sector is what it is, it has been affecting productivity, it has been affecting competitiveness, it has even been affecting the capacity of the economy to diversify. So that reform, we expect, will attract more investment, will encourage more private capital, both from within and outside the economy, to come into that sector. So we'd like to see the sustenance of that. Then, of course, the president has signed the budget, and we are seeing the sustenance of the January to December budget cycle.
The budget cycle, yeah.
You know, that is good, you know, for planning, for certainty, and it's also good for the implementation of the budget. When you are sure that every year the budget cycle will run from January to December. So the fact that the government has tried to sustain that, both the executive, the National Assembly, the Budget Office, I think we must commend that initiative. We also like to see that, you know, to continue. Then we saw some steps that were taken last year concerning the petroleum industry bill.
Yeah.
That's a bill that has been in the works for so many years. Yeah. We are hoping that this time around, because we are beginning to see some new momentum being generated around the PIB. And it's a major instrument of reforming the upstream oil and gas sector. And it's also a bill that, if we get right, it's likely to bring in a lot of investment into this economy. So we want to see that through. It started last year. We want to see that sustained. Then in the financial markets, although we have divided opinion on that, we have seen a significant reduction in interest rates. Those who are in the real economy, those who are borrowing for investment, are quite happy with it. In fact, we had some of our members that have said that they were even getting cheaper funds from commercial banks than from development banks. You know, which is a narrative that is good. You know, when
because
we talk
of some of the policies the central bank
because of some of the policies of the central bank. You know, so that again, if you can sustain it, a situation where it will be easy to access credit for investment, that is a good thing. Then we also saw the impact of that on the capital market.
Yeah.
The stock market was a major beneficiary
Absolutely.
of that development.
Yeah, investors who couldn't get much returns from the fixed income environment had to move.
They had to move to the stock
equities
market.
Yeah.
So that brought a lot of you know.
All right. Let me also take you back to the president's broadcast. He did emphasize on the need to support the youth. He recognizes that the youth of every nation is the future, you know, of that nation. I'm sure you will recall the NSAS protest that took place in 2020. And that NSAS protest is not just about, you know, protesting against police brutality. I mean, there are so many issues there. Joblessness is there. And then World Bank would always tell you that human capital development is key to any nation's economy. Now, looking at what the president has said and talking from a business angle, how do you think, you know, this government can actually, you know, deal with the issues concerning the youth? You know, talk about education. And then when you talk about human capital development, what is the way forward?
Well, what the president said is something that is good. But, you know, one thing that we also need to realize is that there's often a gap between what he said and what happens eventually.
That's the thing.
You know, over time, we have had very beautiful speeches being read, promises that sometimes tends to, inspire some confidence. But down the line, you see that there is no alignment between what is happening practically and what was said in those speeches. But having said that, what he said was good, valid, but what is important is to commit resources to it. Commit resources to education. Because right now, we find a situation where if you look at the primary and secondary levels of education, it's almost becoming a private sector affair.
Yeah.
Especially if you want quality. Yes.
An enterprise. And then, the private people seem to make a lot of money from it, isn't it?
Of course, once it's become a private sector affair, then it becomes a profit-making venture. The private sector is not in that space for charity.
But that shouldn't be so. Education should be social service.
Exactly. But, the private sector was also filling a vacuum. It was the failure or the shortcomings in government investment in human capital. That is what created that investment opportunity for the private sector to go in there, because there is a huge demand which the government cannot meet.
In other words, any parent who cannot afford to take the child to a private school, then
that is the challenge.
No choice.
Yeah.
So that is to underscore the importance of government investment in education. In other climes where they have an economy that is thriving, where they have very solid human capital, they don't joke with primary and secondary education.
Absolutely.
And there's easy access to it, and quality education for that matter. But this is a completely different story here. If you don't have good money, we are seeing primary schools where people are paying up to 500,000 per session.
Yeah.
Some even more. So what do you make of that in terms of all the children of the poor? So we should not have a society where, because you are not economically empowered, your children cannot have access to even the most basic of education. So it's a question of changing the priority of government. And this is not just about the federal government. It's also about the state governments. Because all of us are already paying the price for the negligence of education. All this problem of insecurity and all of that, if you analyze it properly, you see that there's a relationship between what is happening in the insecurity space
Absolutely.
and poor investment in human capital.
Yeah, Mr. Yusuf,
So when you have a bunch of youths that are feeling hopeless, they cannot. You see people walking on the street. They ask them, they say, well, it's because their parents cannot pay school fees.
Yeah.
That is why they are walking on the streets.
Mr. Yusuf, hold those thoughts now.
Yeah.
We'll take a break.
Okay.
When we come back, we'll continue. Do stay with us. Welcome back. You're still watching Business Morning. We've been discussing with the Director General, Lagos Chamber of Commerce and Industry, Mr. Muda Yusuf. So, sir, we're in a recession, and we celebrate the fact that the contraction wasn't as bad as was expected. We're optimistic of exiting the recession in the first quarter of this year. And for this to happen, what should be the major priorities of government in 2021?
Well, getting out of recession is a function of the kind of investment environment that we create.
Okay.
Because we are talking about injecting capital into the economy.
Yeah.
We are talking about creating jobs. So we need to generate investors' confidence. So we need to look at those variables that drive confidence in an economy. And there are some variables that are also peculiar to our own environment. The first issue of priority is security. Okay. We can see what is happening in the security space right now. We didn't have a good story to tell in 2020. So in 2021, I think we should see a different narrative as far as security is concerned. Because if you have an environment that is not secure, where people are not sure of the safety of lives and property, then you cannot have investment. Although this issue is more pronounced in some parts of the country than others. But what happens to any part of the country invariably affects all the other parts of the economy. because it's a single economy.
Exactly.
And all these farmers and things that have been affected primarily now, they're also investors in their own right. Agri contributes about 23% of our GDP. So if we continue this way, we can have a situation where we will have a major crisis with agriculture, a major crisis with food security and all of that. So security is key to engender the confidence of investors. Secondly, we need to normalize the foreign exchange market. The foreign exchange market in 2020 wasn't good enough. There were issues about this multiplicity of rates. There were issues about too many brokers in the system. There were issues of so many parasites taking advantage of premium from one market to the other. There were issues of uncertainty. People could not plan, and investment risk increased. So we need to normalize the market. And one key way to normalize the market is to ensure, as much as possible, a market-driven exchange rate. So that will help, not just about
so the
creating
government
confidence.
Shouldn't interfere at all in any way?
Well, it's not that the government should not interfere, but as much as possible, we should give the market a much broader room, to determine the allocation of resources in the market. We should move away from this culture or this policy or philosophy of something that looks like an administrative allocation of foreign exchange. The NAFEX market, that's the importers and exporters window, for instance, should ideally be purely market-driven. And if there is any need for the central bank to support it, to strengthen it, the central bank can also inject foreign exchange into the market. Yeah. We have seen a time in the past where, because of the robustness of the NAFEX market, the I&E window, the central bank even went and bought foreign exchange from the market, because the market was so robust. So we should, in 2021, create a room for the foreign exchange market to inspire much more confidence than what we had in 2020. And one very good advantage of that will also be that it will also help to support the supply side of the foreign exchange market. Because the inflow of forex into the economy is not only through oil. You can have inflows from other sources, from FDIs, from portfolio flows, from diaspora remittances, from export proceeds.
And the FDIs still depend on the security situation.
It depends on the security situation, that is why. It also depends a great deal on the foreign exchange market. The foreign exchange is key, is central to attracting investment and to attracting inflows into this economy. And that will help us to also move away from a purely demand management focus of the foreign exchange market to a focus that will also incentivize supply into the foreign exchange market. So as much as possible, we should normalize the foreign exchange market. Yeah. Then we should also fix our ports. In 2020, our ports was a major source of frustration to investors. Unfortunately, we couldn't do much. There are quite about two major components of this port issue. There is the infrastructure component of the problem. That is the quality of facilities within the ports, the quality of access roads within the ports. And you see a port that doesn't have capacity to handle the volume of trade that we have. These ports, the last time there was a major investment will be over 20 years or more. Between then and now, the economy has grown. The volume of imports and exports have increased. And yet we still have the same capacity. So there's a capacity problem in the ports. But more importantly is the institutional and human problems that we have. That's the challenges investors are having with the documentation, with the customs, with the shipping companies, with the terminal operators and all of that.
So it makes it expensive
It makes it very expensive. Yeah. It makes it very cumbersome. And sometimes, because of the pressure this is creates for investors, it also creates an environment for extortion. Because when you are under pressure to quickly exit from this crisis, it's very easy for you to be extorted. And that is what is happening. So we have to deal with these issues of the ports. And one very critical thing that we need to fix in 2021 is the issue of dispute resolution. between the customs and the importers.
Yeah.
We cannot have a situation where the accuser is also the judge. It's not fair on those who are operators, economic players in this economy. If there is a dispute about valuation, let us have an independent body that can adjudicate between the customs and the importers. If there is a dispute about classification, let us have an independent body that will take a decision and which will be binding on both parties. Yeah. But what we had in 2020 is a very frustrating experience where the customs will tell you that the value of your good is X. Whereas what you have the invoice, you have everything to say that it is Y. And because they are also chasing revenue, they go for the much higher value. Sometimes these valuations are arbitrary. And if you want to protest, you protest to the same customs service. So you don't get justice. So we are appealing to the government. Yeah. In 2021, let us have a dispute resolution system that is fair, that is transparent, and that is equitable between the customs service and all the economic players in this economy.
All right, Mr. Muda Yusuf, looking at all of this that you have talked about, and I'm sure you did listen to the Minister of Finance react to the recession, and sounded very optimistic that in the first quarter of 2021, we're going to get out of this recession. Even the central bank governor was quite optimistic. So for you, for the business community, are you also optimistic?
Yes, I'm optimistic that we are going to get out of the recession, but not in first quarter. We are looking possibly at the second quarter or the third quarter. Now, we already have a trend in terms of economic performance, which we are hoping will be sustained. We had a major contraction in Q2 2020. It was 6.1%. We had a lesser contraction in Q3, which was 3.62%. We are likely to see a much lesser contraction in Q4, but still a contraction. So that means that the recession will continue. Now, one will have hoped that by first quarter, things will turn around much better. But unfortunately, we had the hangover of the NSAS. We also have this pandemic that is a resurgence of the pandemic. Already in some countries, some steps have been taken, measures have been taken now to lock down some sectors. Even within the country, steps have been taken to restrict movements and to also even lock down some sectors. And some of these sectors are very, very critical sectors to job creation. There are sectors where we have a lot of SME players. So we are beginning to see that. So if that continues, that will further dampen economic performance. It will dampen the tempo of economic activities. So these are some of the things that may slow down the pace of recovery. But we are hopeful that as we progress and with the development of the vaccines and all of that, oil price may also begin to look up, to be much more positive.
Already,
if that happens, that will also help, to accelerate the pace of recovery. So these are the things that makes one feel that, well, 2021 will be much better.
Yeah, particularly with the vaccines coming out.
Exactly, with the vaccines and all of that. And of course, you know how that will impact on commodity prices and how that will invariably impact on our revenue and on our foreign exchange earnings.
Okay, so with the AFCFTA kicking off now, what should we expect to see? What impact will this have on the economy and business going forward in Nigeria?
Well, the AFCFTA is a very important development for 2021. Of course, we also need to moderate expectations because a lot of people are taught that by January 1st, you can just carry your cargo and just get out of the country and go and take anything out and bring anything into the economy from any African country. It's not going to happen that way. There are issues of institutional readiness for this thing. And even the CEO of the Secretariat of the CFTA has also said that.
Yeah.
That quite a number of the institutions that will drive the process are not quite ready.
Yeah.
Not only in Nigeria, in many of the African countries. So it will take time for this thing to effectively take off. But any time it takes off, and hopefully maybe before the middle of this year, it normally presents huge opportunities.
Yeah, well, one of the issues there
Yes.
I think they are trying to deal with is the rule of origin. And I'm happy you are here and you deal with some of these business people who are into importation and exportation. So for you, LCCI as an advocacy group, how have you been able to educate your members in terms of the rule of origin?
Yeah.
Well, we have had quite a number of sensitization sessions in 2020 and even before then. Since this pronouncement, this discussion around the CFTA started, we have been having discussions and engagements to enlighten members of the private sector, not just our members, even the wider business community. We have had a lot of interaction even with the Ministry of Trade and Investment on this. So there's a lot of education going on, even with the Manufacturers Association, NECA, and NASIMA, and the rest of them. But what is more important is the institutional capacity to enforce the rules. It is one thing to educate people, but it's another thing to enforce it. Because no matter what you say, there will be elements that want to circumvent the rules, to take advantage of whatever situation presents. So the institutional capacity of each of those countries to enforce those rules is what is most significant. Otherwise, the biggest risk to the Continental Free Trade Agreement is the failure or the capacity to enforce the rule of origin. If we are not able to enforce it, and for just to explain, what rule of origin means is that all the items or goods that will be traded within the framework of the African Continental Free Trade Agreement must be goods that are produced in Africa. You know, so that we don't have situations of transshipment where people will bring goods from Asia, from Europe, and all of that, and now begin to trade it within the continent. That is the whole essence of compliance with the rule of origin. And if you don't have a very sound institutional capacity, you know, across the continents, there may be an issue. And I give you an example. Even within ECOWAS, we had a challenge with the rule of origin. Because we have the ECOWAS trade liberalization scheme, where you can trade freely within ECOWAS. And the customs have reported a number of times that there are goods that are relabeled as being produced in West Africa that were not produced in West Africa. So people bring in goods from other places, they relabel it and begin to trade it within the sub-region. So that was a major risk even to ECOWAS, and it was one of the challenges that even the customs were grappling with within the framework of ECOWAS. So that is very key. Then there's also the issue of the legacy bilateral agreements. Many African countries already have bilateral agreements with other countries outside of the continent, you know? And some of these bilateral agreements are trade agreements, which allows for free trade and all of that between their countries and these other countries. So we need to see how we align these bilateral trade agreements with the Continental Free Trade Agreement. Otherwise, there will be a conflict where a country already have maybe a bilateral trade agreement with China, with UK, with the EU, to allow for free movement of goods and all of that. And also that country is a member of the African Continental Free Trade Area.
Well,
so these are things that we need to align, you know, properly in order to ensure that we get that agreement functioning properly.
Well, this is something that has just started, so I guess we'll continue to learn more about it. Thank you very much, Mr. Muda Yusuf. It's always a pleasure, and it's nice having you this first business week in the new year.
It's a pleasure.
It's always a pleasure. Thank you.
And Happy New Year.
Happy New Year. And welcome on board.
Thank you so much. Thank you. So now let's look at the equities market. What has been a truly unusual year. The local bourse closed positive in all of the 3 trading sessions in the last trading week of 2020. The all-share index rose above the 40,000 psychological mark for the first time since 2018. The first trading week of the new year begins today. Let's hear from a stockbroker, Rotimi Fakayejo, on what to expect. Hello, Rotimi.
Happy New Year.
Happy New Year, Rotimi. Happy New Year. How's it going?
Thank God. I would believe it's going to be a prosperous year.
Yes, amen. Amen to that. So the bulls took over the shine in 2020. A new trading week is in. The new year starts today. What are we likely to see going forward into 2021?
Well, I think we're still going to have a continuity of what we saw in the latter part of year 2020. We saw very remarkable figures coming for the all-share index, 50% year to date as of December 31st. 40,000 basis, above 40,000 basis points for the all-share index, and also the market for the first time crossed 20 trillion naira. And I think all of these are things that have really impacted much on the market. Now, when I said continuity, I imply that there are sectors that still have a lot of upside that have not really witnessed a tremendous trajectory in the market. And that particular sector has been what has been driving the market for quite some time, and that is the banking sector stocks. So for the upside that we still have in the banking sector stocks, we are likely to see a continuity in what we saw last year. And I think the banking sector stocks definitely will add a lot of value. One, because there is an upside, there's still a lot of room for appreciation. And secondly, because of the good dividend payout, which will be happening maybe very close to the end of the first quarter. So all these expectations are definitely going to put investors on their toes. And I believe very strongly now that the interest rate for fixed income securities is almost nearing zero, I think investors will think wise, even for long-term purpose, and invest more in the equity market.
Some analysts would advise investors to take positions in only fundamentally justified stocks, as the weak macro environment remains a significant headwind for corporate earnings. As a trader, what are your stock picks to start the new year?
Well, I agree with what other analysts are saying with respect to companies with sound fundamentals. That cannot be done away with. Sound fundamentals, good corporate governance, profitability, and also sustainability. And I made mention earlier, we have some crop of stocks in the banking sector stocks. Those ones cannot be taken out of the way. We have the ones in the ICT, they are fast upcoming, and also in the industrial goods. Consumer goods, they've really been struggling for over time because of the proliferation of our borders. Various goods flooding the market, not allowing the production capacity of the local companies to be actualized. So I believe that the banking sector stocks, not all of them, the industrial goods, the ICT, and some equities in the consumer goods, and likewise those in the agriculture, that is Okomu and Presco. I believe those ones are good takes that investors cannot make mistake about at all.
Okay. No problem. Thank you so much, Rotimi. Thank you for your time, and I wish you a profitable year ahead.
Thank you.
All right. Thank you.
Of course, it's going to be profitable for
be.
everyone. All right, we take another quick break, and when we come back, we do an opening call to London. To stay with us. All right, in the UK, ministers are facing demands for more honesty and transparency over any logjams at the UK border in the wake of Britain's exit from the EU amid concerns that waves of disruption will last for 6 months. Let's have a chat with Juliana. Good morning, Juliana. Happy New Year to you. Good to see you.
Good morning, Chimeze. Happy New Year to you. Lovely to see you and the viewers.
Yeah, well, it's a brand new business week in the new year, and of course, Brexit has kicked in. How has the day opened up for businesses in London?
Yes, of course. I'm afraid we're going to be talking about Brexit for many months to come. I've got to tell you, it's pretty quiet corporate day, and that's to be expected because, of course, it's January the 4th, typically a very quiet day. But because there are so many lockdowns, businesses that would typically see a bit of a boom in sales, especially because of January sales, are not seeing that. So it is quiet. We did have a little sneak peek on the ports on Friday when I was speaking to Bissy. But again, we didn't really see much drama. The drama that everybody had predicted is not yet started. And I think for observers and commentators, they're really expecting to see that starting to kick off perhaps in mid-January. Those tens of thousands of queues that we're expecting to see at Dover and in Calais won't be coming at the moment. But we are expecting manufacturing PMI data later today that it's expected to come in at about 57.3, showing that in December there has been some sort of activity. But again, it's the 4th of January, so pretty quiet at the moment.
I will look forward to get an update on that PMI. But how are the equities and currency doing in early trade? How much of these Brexit developments and, of course, the PMI expectations, just wondering if these have been priced in already, or are there key developments we have to look out for in the week?
There are a couple of key developments, but in the first trading session of the year, the FTSE's got off to a flying start, triple-digit upgrade on the FTSE this morning. The blue chips are up about 1.9%. The FTSE 250, the domestic market, that's also up by about 1%. So there's been a good start on the FTSE this morning. I think that's really because, obviously, the Brexit deal, that last-minute Christmas Eve deal that was signed, sealed and delivered by Boris Johnson, it does mean that businesses can breathe finally a sigh of relief. They can start investing again, they can start employing again, and they've been waiting for that for 4.5 years. There is a little bit of bad news. Of course, everybody knows that COVID cases in the UK are surging, up by about 55,000. That was how many we had of positive infections yesterday. Sir Keir Starmer, the Labour opposition leader, is asking for Prime Minister Boris Johnson to go into a third national lockdown today. He put out a statement yesterday saying there's no point of Boris Johnson waiting 2 or 3 weeks, which typically this Conservative government has done. He said he wants to see much further action. And this follows an interview that Boris Johnson gave to the BBC yesterday. Scientific advice does appear to show that Tier 3 and Tier 4 is not working and that we may have to go into a lockdown. So that's a topic of discussion today. I believe the Prime Minister is going to be chairing a COBRA meeting, so we should be getting an update sometime in the next couple of hours. But in positive news, the Oxford University AstraZeneca vaccine has started its national rollout today. There have been media camped outside hospitals where the elderly, people over the age of 80 and NHS and care home workers have been given this vaccine. There are 500,000 doses. And so we are expecting to see that hopefully the inoculation of society will once again have us meeting our loved ones and not adhering to social distancing measures, although that is going to take a couple of months for it to make society safer again.
Well, we have to focus on those positive news there. Anyway, just before we went on the New Year holiday, we talked about Bitcoin as it continues to surge. And I asked if you will ever consider buying into it. As of Sunday, Bitcoin value surged about $34,000. Perhaps it's a good idea to start the new year with an investment in that market.
It is, Chimmy. We did discuss this, didn't we? And I said, as soon as you put down your $30,000, I'll join you. But look, you know, Bitcoin, the initial digital currency that a lot of people were criticising earlier this year, is surging expeditiously. Just 3 weeks ago, it broke records by crossing the $20,000 mark. In the past 24 hours, it's now crossed the $30,000. And a lot of people are saying, is Bitcoin and digital currency is going to be the new safe haven overtaking gold? I don't expect that to happen anytime soon. But clearly, it appears to be something that a lot of people want to invest in. And I think this really is because of how the global equities market has been over the past couple of months. 2020 was, of course, horrific for the equities market. And we did see a lot of central banks across the world pumping more money into economies to try and keep people people afloat because of COVID-19. But with Bitcoin, there are only so many digital coins that can be available at once. So for some people, that appears to be a very attractive and lucrative market. But again, $30,000. So Chimmy, as soon as you've invested in yours, I'll certainly be investing in mine.
Honestly, Juliana, I have no intention. But the interesting thing there is that Laddie here has a lot of interest in Bitcoin. Laddie, well, is that a new safe haven aside from gold? Should I invest now?
Well, talking about safe haven, I don't know about that. But, because you don't want to buy the top and, sell low. So at this point is take caution and just do what you can. And research.
Very risky as it is.
Yes.
And we don't have that amount of money to actually...
Yeah, you don't have to buy the full thing, really. You can always buy fractions of it and still make profit.
Perhaps I have to learn from you.
Exactly. So let's take a look at the debt and currency markets at this time. The Treasury bills market traded with bearish sentiments through last week. And following the sluggish momentum in the market, despite the liquidity influx in the system, the average yield across all instruments expanded by 6 basis points to 0.5%. Across the segments, average yield expanded by 3 basis points and 8 basis points to 0.6% and 0.5% at the OMO and NTB secondary markets, respectively. Last week, at the primary auction, the CBN rolled over maturing bills worth 74.84 billion naira with allotments of 10 billion naira of the 91-day, 20 billion naira of the 182-day, and 44.84 billion naira of the 364-day at respective stop rates of 0.035% and 0.5% and 1.21%. This week, analysts expect activities in the T-bills secondary market to remain quiet following the relative unattractiveness of the instrument in the space. Now looking at bonds, bearish sentiments prevailed in the Treasury bond secondary market as investors sustained profit-taking for year-end activities. The average yield expanded by 21 basis points to 6.1%. And analysts expect the bearish sentiments in the FGN bond secondary market to be sustained as investors continue to reprice yields, giving stretched valuations.
Well, I guess it's a new trading week, Laddie.
Yeah.
Perhaps for investors, for some of us, we'll have to decide where we want to put in the money.
Exactly.
Is it a fixed income market?
Yeah.
Well, it's not attractive for investors.
Exactly.
Is it the Bitcoin? Or is it the equities? Those are too risky markets. I don't want to get there.
Just make sure you're buying low and selling high.
But definitely, that's it.
Yeah.
So let's watch. Perhaps the equities would be a good way to go.
Yeah.
The alternative of fixed income.
Yeah.
Well, that's a wrap on the program. Thank you for watching. I'm Chimeze Obi Iwago.
And I'm Laddie Williams. Thank you for watching.